Hello, everybody, and thank you for joining us for today's episode of Trade the Chain. I'm here with my co-host, Ryan Gorman, and our two crypto analysts, Monty and CJ from marketrebellion.com. It is February 2nd, and we are going to cover today ADA, XMR. I just totally forgot. That's why I did that. I'm so sorry, guys. ADA, XMR, and as well as Ryan's bringing us a really good news story, which is timely because it has to do with Coinbase and their valuation, what their stock price is getting listed at, and we'll discuss whether we actually believe it or not. But from there, I'll let Ryan take it away with the legalese, and let's have fun.
Let's do it. Thanks, Alex. This is just a reminder that all content from Trade the Chain is for informational and educational purposes only. It's absolutely not investment advice, and no one should ever take it as such. Trade the Chain is brought to you by Trade the Chain, a global community of traders of all abilities around the world, 20 time zones now, sharing ideas, sharing victories, and using AI-driven sentiment indicators, actionable alerts, and original research to help them beat the market. Trade like a crypto insider, tradethechain.com for a 14-day trial.
And marketrebellion.com/crypto. Get access to exclusive trade ideas. Monty and myself's macro portfolio allocations, our pro charting platform, a trading education curriculum. We're dropping a new course this week as well. And an elite community of traders all around the world and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. Start your first month trial for just $1 at marketrebellion.com/crypto. We appreciate that, guys. Also, if you haven't subscribed to Alex's channel already, please do so and hit the like button down below. We really appreciate that. But going over to the big boards here, we have Bitcoin going up a little bit since our last show yesterday, but still in the descending triangle. We are on a bullish green 6 here, and we are doing a decent job of consolidating. In my opinion, there's not much I can say that was not covered yesterday. I'm still very neutral. I'm looking for a confirmed breakout in either direction. This channel here between kind of 35 to 33K is kind of a no trade zone for me. It's very hard to pick a direction of whether we'll break out down or up in this particular instance. So I'm kind of just waiting for either one of these levels to be broken, whether it's 35K and we get a flush break above. Maybe this will become our macro high or low. It's too early for me to say yet. The one thing that I'll go that we haven't looked at in a little while is just a weekly chart of Bitcoin here on TradingView. And you can see that our middle Bollinger Band is now up to 21K. A few weeks ago, it was down at 19K. So that's, we have the bottom band and our lowest utmost support level rising up. It may be at 26 in the next few weeks where we come down and touch it. We don't really know yet, but I just wanted to bring this to your guys' attention because our lowest form of so-called support is actually coming up now. So interesting for what it's worth. Now, one thing that we have been hearing, and the question that I want to pose to you guys, is F2Pool, largest mining pool in the world for Bitcoin, and they've had a record amount of outflows from their mining pool. Are they selling Bitcoin? Is this a reason why we're seeing a large decline? What are you guys' thoughts?
I mean, that makes sense, right? Miners hold a significant amount of Bitcoin, and when it reaches a certain level, they tend to capitulate and lock in some of those profits because that's the whole point of mining, to earn Bitcoin and sell it off when it hits a high, and then you just keep mining more at that cheaper price and sell it off when it gets higher again. But that doesn't explain, it's down, but it's like a sideways down, right? It's like grinding down versus just going through the floorboards like one would think if that much Bitcoin was actually being sold. And sentiment long-term is still bullish on the Trade the Chain dashboard, but the daily sentiment has remained almost even at neutral, just at or above 60 for the past 7 days, more or less. So, I mean, I'm not sure what any of this really means long-term. It's kind of a gray area for me, like you said, CJ, yourself.
It's interesting because a lot of people have been bringing it up, but it just doesn't seem like something abnormal. You know, this is something that takes place in the crypto space quite often. I think when we see an extraordinary event, the one that really comes to mind is in 2018, going into December of 2018, when we fell from 6K all the way to 3K. That was a lot of miners all selling at once, really driving price down. But that's not really what we're seeing here. What were you going to say, Alex?
No, I was just going to say, you know, listen, to Ryan's point, the miners are in business, right? So they have a business chart that they follow and how to keep the lights on, stuff like that. So you go back to 2018, that was before the proliferation of loans and everything else. And so the only way they could really capture any dollars to fund, because they do need fiat to pay the bills, is to sell off. Nowadays, to Ryan's point again, this is how they do it. But when they do it, most of them take loans. They actually don't want to part with their BTC because they're hoping on the higher value accumulation to it. So they'll take fiat loans and pay their bills. And then at some point when they repay the bills, they pick back up their Bitcoin again.
But like also, sorry to cut you off, Monty, but also back when Bitcoin was at 6,000 and they sold and put it down to 3,000, they were able to mine such higher quantities of Bitcoin compared to now. No, right? You've had more than one halving since then.
Ryan,
calendar.
Yeah, exactly, man. That's the whole thing, right? It was more Bitcoin and less people on the other side of Bitcoin. Yeah. So the order books were skewed, and so it moved the market.
Yeah, exactly.
Yeah, and I think to like your guys' point, if F2Pool really were just dumping all this Bitcoin, an outflow doesn't necessarily mean they're selling it. They could just be moving it to another wallet. I think it would have had a kind of more profound effect. I mean, 10K Bitcoin being dumped all at once per day. I would expect that to kind of result in a sharper sell-off than what we're seeing, just based on what we've seen historically during other instances of minor capitulation. But we didn't really see that too much. We're kind of, like you said, holding steady around this range. So it was a significant amount of Bitcoin and an interesting metric to look at, but it doesn't really look like it's affected the market all that much.
And Ryan, to your points about Bitcoin miners and just the halving in general, and yeah, that block reward was cut in 2020 from, 12.5 new Bitcoins created per block every 10 minutes. Now it's only 6.25. So Willy Woo has said this, many other analysts have said this, but historically, miners have been the predominant sellers of Bitcoin in the market, but that's shifting. Since these block halvings are occurring, miners are no longer going to be that. The predominant sellers of Bitcoin in the market are going to be exchanges going forward because of exchange fees and commission fees that they collect based on of trading. So,
absolutely. All right, cool. I mean, I'm excited actually for the next big board, which we usually don't get too excited too frequently about, and that's Ethereum. Ethereum is bounced to the 1400 mark, has blown through it a couple times, and here we go, kids. This is it.
It hit an all-time high earlier today, Alex. It breached 1500.
Yeah, I mean,
this is amazing.
It's back. Does Ethereum have an army or a navy or something?
It's too big for that.
It's Vitalik.
It's too big for that.
Yeah, that's the thing about Ethereum is like it's gotten so big where it's got several communities at this point that are kind of keeping this thing afloat and providing this bullish price action. Like we talked about yesterday, there are so many DeFi projects that really appealed to the retail trader. And with this influx of retail capital that we've seen over the last week, Ethereum has clearly been one of the primary benefactors of retail speculation. So I don't think there's any one army in particular, but just Ethereum in general really appeals to the retail trader.
You don't think that sorry, CJ, you don't think, Monty, that the 29 billion locked on Ethereum, that's an all-time high in terms of DeFi projects and assets locked on DeFi. You don't think that that's also fueling it? Like the rise of DeFi?
Oh yeah, definitely. Yeah, like I said, I think DeFi really, this is kind of my prediction all along, but just because of the utility of these various DeFi projects, they're somewhat still novel and in their infancy. I really kind of expect them to appeal to the retail trader, and they have, and that's obviously been great for ETH because it's kind of the downstream of these DeFi projects where if people do take capital in these massive DeFi run-ups, that money tends to trickle down into ETH and then eventually into Bitcoin. So yeah, I think these various projects that are kind of really gaining a lot of momentum in these last few weeks, particularly the ones that are built on Ethereum, are very bullish for Ethereum and providing a lot of this positive price action.
Let me ask, go ahead, CJ.
One thing, just if newer viewers are joining us and aren't aware, to participate in the DeFi ecosystem, you have to acquire Ethereum in many various cases. And what we're looking at here down in this chart is a perpetual futures contracts of the most popular DeFi assets. And as you can see, it's been through the roof these past few weeks. And so what I really like in Ethereum, and one thing I want to teach you guys about TA here and ascending triangles, is you take this distance, you measure it from the resistance level all the way down to the furthest decline, and you take that measurement and then just move it up here. It'll extrapolate price to a target of roughly 1,800 because this distance is reflected typically on that distance on the breakout. So it gives us a target extrapolated to about 1,800. But this is a beautiful ascending triangle. I know yesterday we talked about 1,400 as the breakout level. Now we're getting it. Still want to see an increase of volume past the resistance level. We're getting that a little bit. But really bullish overall for Ethereum. I'm very worried about Bitcoin, but we'll see what happens.
So Trade the Chain, users of Trade the Chain are seeing that, trading volumes are up 4.5%, relative tweet volumes up almost 40%. That's sentiment scores, 72 daily, 71 long-term. I think, the sentiment data backs up what you're saying. The analysis, the AI that Trade the Chain uses is kind of confirming from that angle that, Ethereum, not confirming, but in theory, it's saying that, Bitcoin will go up, not Bitcoin, Ethereum will go up. It's up almost 13% over the past 24 hours, 65% over the past 30 days, kind of almost in lockstep with the rise of assets locked on, Ethereum locked on DeFi projects. So, I mean, it goes to show the value of using both technical analysis and sentiment analysis, marrying them together to have a more cohesive view of the market for your trading strategy.
Let me ask this. So there's Uniswap, very popular DEX, okay? Particularly among US people with certain regulations that prohibit all those fun little exotic coins being listed on exchanges. Now, with that, what do people buy in order to participate in a swap? Ethereum. So if you have, and I don't know what the percentages are, but I would love to dig into this. How much ETH is purchased on the order books in order to fuel the swap action on DEXs? And how much does those Ethereum purchases account for a rising price action, a bullish movement in Ethereum? So that, like for instance, if Ethereum has had a steady hand up, is that lockstep? I love that phrase that Ryan uses. Is that lockstep with the rise of the DeFi index? I mean, the more that goes on, the more Ethereum follows that because people have to buy Ethereum in order to participate. You know what I'm saying, guys?
Yeah, that totally makes sense. And I think when CJ pulled up that DeFi perpetual index, it's clear that it's running up kind of in lockstep with Ethereum. So I think, like Ryan said, a 63% gain over the last few months. So, here's the ETH chart, very solid run up. And if you look at it compared to the DeFi perpetual index, it performs pretty comparably. So I think there's a good argument to be made that, yeah, Alex, a lot of the bullish price action from Ethereum is the result of people fueling these swaps on the decentralized exchanges.
I think you can see it most prevalently in August, because that was when the first mega millions came into DeFi. And you can see we have ETH here, and then we have the perpetual futures. And so both in August, we just saw a surge and a very nice correlation between those two.
All right, very cool. Let's move on now. We are going to ADA. I just guessed that. I have no idea which chart we mentioned he has up first, but ADA is the first one. We have, listen, there's a lot of Cardano fans out there. This one has taken a nice step upwards, looking at about 23% over the last 24 hours. Anything on the technicals from this? I mean, first of all, there's been no real news on Cardano. So I think it's one of those popularity buys right now. A lot of people are hoping for the future.
Yeah, I think that's definitely the case. And yeah, while we're, I think it's fitting that we're talking about this after Ethereum, because to use Ryan's term again, lockstep, Cardano is one that really has moved in tandem with Ethereum. And I think it's really, I mean, that's not surprising given the fact that they're very similar in terms of utility. Also, Charles Hoskinson, former co-founder of Ethereum and now founder of Cardano, they have a similar ethos, similar utility. I just want to quickly show you guys how how Ethereum and Cardano have looked somewhat comparable in terms of technicals, because they're continually setting higher highs here. But the one reason I'm slightly more bullish on Cardano than I am on Ethereum, just in terms of the technicals, is because, in my opinion, there's just way less upward resistance for Cardano right now than there is for Ethereum. Obviously, Ethereum's kind of messing with this 1500 resistance level right now, and it's kind of teasing with a breakout. But it's just 1500 is just a not only right is it's the all-time high, but it's also just a psychological resistance level. Whereas with Cardano, really all you have is this 50-cent psychological level. The all-time high, it's still like above $1, so there's really not much in terms of upward resistance. So that's one reason I'm looking at Cardano, and I think it kind of goes back to just the retail trader psychology, where like they're looking for maximum profits. They're looking for projects that are cheaper. And if you are bullish on Ethereum, you're probably also somewhat bullish on Cardano. So I feel like people are investing in Cardano for a similar reason that they're investing in ETH.
So last week there was an announcement put out that like a development like sandbox was created for Cardano. You know, a single unified language with single standards to run smart contracts and smart applications on the Cardano blockchain. And it looks like it didn't necessarily gain traction until the past couple of days, because if you look at the tweet volume, that only really shot up over the past 24 hours. It's up 138%. So, and sentiment only really kicked up, you know, kind of overnight when it was re-upped by Input-Output HK, IOHK, the developers behind that. So I'm thinking that first announcement of that development, of that release, kind of maybe went under the radar. And then once this got put out again around 5 a.m., that's when it looks like tweet volume shot up, price action shot up, and sentiment went above 80. Right. So this goes to show that maybe this is another event-driven development, I think, that goes to show the value of being able to analyze social media sentiment and tweet activity.
Yeah, I mean, I'm a believer that until something is firmly delivered as a solution, it will be an event-driven trade, and that's fine. You know, more power to them. All right, folks, let's move on to XMR. XMR, what do we have going on here? It has faced its own uphill challenges over the last couple of months with various listings and stuff like that. But what are the technicals looking? It had a great run up in Q3 going into Q4 last year.
Yeah, XMR was one of our favorites. Ever since March, the liquidity crisis, it had really just climbed up without any pauses. Now, of course, just as a brief recap, like you mentioned, Alex, here, this decline came as a result as a delisting. Because XMR is a privacy coin, it's impossible to determine the amount sent per transaction unless it's just between the user and the recipient. But what we have here on the daily, and it's much more prevalent on the 4-hour, but what you can see forming is kind of a inverse head and shoulders pattern. and it is most clear on the 4 hours. So let me go to that. But I've highlighted this pattern because we haven't quite broken out yet. Just refresh.
As we all sit watching the swirling circle, thank you for these technical difficulties. Our regular.
So we're waiting for this chart to load. It's worth keeping in mind that Poloniex now has futures on XMR. Those were recently announced. So that could be one of the reasons. They were announced on the 29th. So that could be one of the reasons for this recent uptick.
Polo? I haven't heard that name in such a long time, Ryan.
Also, on the same day, Grayscale announced that they may launch trusts for Monero as well. At least that was in the news. So I mean, that could be one of the reasons why, you know, people have started buying it again where they can after the delisting.
That's a good point, Ryan. We get a lot of chat in the community about that. People looking, hey, they just filed and organized the trust and whatnot. So I just want people to be aware that every time they do what Ryan just mentioned is because they're anticipating or having the optionality to get into that business. It's not firm, but it's a great precursor. It's almost like a bet. And then what you do to really solidify that is scour those Form Ds for Grayscale and wait till they put in that filing. Because the minute they put in that filing, that optionality just became reality.
Yep.
And boom.
That would be an incredible development if that actually happened for XMR. I mean, let's remember, this is a cryptocurrency that most people just equate to as, you know, a currency for the dark web or something that runs underground economies. Because we know the FBI has told us that they can't track Monero, or they have very, very large trouble tracking Monero. But to the technical point here, this is very bullish. We're creating some higher lows. And I think we're going up in the interim for XMR based on this inverse head and shoulders pattern. Now, we haven't seen an increase in volume yet. I'm watching this volume very closely as an indication of a potential breakout. We did have a sell 9 here, so that makes me a little hesitant, but I'm watching this very closely because it's a very, very bullish formation.
I think if people started trading it more, right, because volume's already down 26% off the delisting, it would take a lot of volume for it to go up relative to the previous 30-day period. So we might see volume remain level with the previous month, but that would kind of be an illusion, no? If we were able to hit those levels again, because it would actually represent a rise, even if it stays level, because there's less venues where it's available at.
Yeah, I would have to find out the amount of volume that it was doing prior to the delisting, and then compare like what was the overall volume like relative to that one exchange that delisted it. So
Yeah,
you make a good point.
And you also got to remember with the delistings, it was already a rarity. It was very difficult to withdraw Monero from exchanges. So that's just gotten even more so. So when you're trading this Monero, you know, traders have to go that extra step. They have to swap it either into a US, you know, a stable coin pair, or they have to take a long exposure in another asset, but nobody can withdraw it. So it is one of those, you know, complex things. And to Ryan's point, and a little scarcity on the venue subject. But what Ryan has next is really what we're all watching. It's interesting. It is Coinbase's selected NASDAQ for their IPO, and there's a preliminary valuation out, huh, Ryan?
Yeah, this is remarkable actually. The shares are trading on the private market at 277. Given the amount of shares outstanding, that represents a valuation of just below 70 billion. Oh, that's what futures contracts are saying. On the NASDAQ private market, they're trading at 200. So that's a $50 billion valuation. So the valuation is going to shake out somewhere between 50 billion and 70 billion, one might guess, which, I mean, for an exchange that can't keep itself running when more than 10 people want to buy or sell Bitcoin, that seems like a remarkable valuation.
Come on, I wanted to do the first joke.
But like they're following the crypto ethos of, you know, instead of IPO, they're going direct listing. So it's more of an IEO, right? In essence.
Ryan, how many banks can you name on your fingers that now will have a lower valuation than Coinbase?
I can only count to 5.
I know it's UBS. I
Oh,
know
absolutely.
it's Santander, I believe. There's a couple other. I don't want to name a wrong bank, but there's some big bulge bracket banks that are now going to have less market cap value than Coinbase. To Ryan's point, the exchange that keeps going down keeps seeing its value go up. All right, I got one in. Thanks.
There it is. Yeah, I'll refrain from naming any banks. I don't want the goon squad coming after me in the middle of the night, depending on the bank. But no, it's just, this is a remarkable turnabout for a company that's only been around for, it's one of the OGs, but it's not really an old company. It takes most companies decades to build this kind of valuation. So,
Yes.
I mean, it's incredible. It shows the power of the blockchain and cryptocurrency markets, but also just the amount of interest in them and how the traditional market is starting to perceive and take them more seriously.
Well, I got two questions for you then. One, how many people are going to make a huge profit? Entities going to make a huge profit off of this when it goes public? I mean, we got Goldman for one. But how many other high-profile investors are involved? I haven't paid attention to their rounds lately, but I know the last round they did, literally, which was in 2018 for 800 million, I believe, and the headline was, "We just raised it because we could." Do you remember that, guys? They just put 800 million in their bank account. But it's crazy. Now there's futures on FTX to the value of this going out to market. I haven't been paying attention to that market. I don't know what they're at.
That's what I was talking about first. I misspoke. So they're the ones trading at 277, the futures. That implies valuation of 70 billion. And then on the NASDAQ private market, shares are trading at about $200 each. So with 254 million outstanding shares, according to the block, that's 50 billion. 50 billion.
Well, let me ask you,
right? 50 billion.
Using all that, can we figure out whether there's a downward pressure or upward pressure on what that price movement would be when it gets out of the gates?
I mean, that's a good question, right? Because if I'm holding shares of Coinbase and I can get $200 a share for them, or watch it pop to like 250 at the open, I'm selling. Why not? You've been holding that bag for a while. I'd sell.
Goldman makes a lot of money, like the majority of their money, from IPOs like this, where they buy the shares early and then dump them on the retail investors once they first have their opportunity to buy.
The unwashed masses.
So
I thought you were just going to stop after Goldman makes a lot of money, just keep it as a snap top fact.
I wouldn't buy it on the secondary market. My untrained eye, I feel like it's going to have like a Facebook-like dip and go down for a bit while people scrutinize it.
Oh man, don't bring up the pains. I had those pre-IPO shares, and when it went public, I think it was, my memory may be wrong, it was like $32 or something like that, and it dropped down to 20, 19, 18, and I was like, what is that? What I was like, these Facebook shares are going nowhere, and I sold them all, and then that was it. And I was like, come on, dude.
What did you get them at? What was your initial buy-in?
It was $15 a share, and for every share you got, it was 5 shares of Yelp. You got tag-alongs with.
Okay.
Yelp
so does that mean anyone who gets into the Coinbase IPO gets like 5 shares of Kraken? I mean,
I don't know, man. I don't know. Some crazy stuff. Well, CJ, okay, so thank you guys for everybody watching, for joining us today. We had no honey holes for you. I apologize for that. If you could just comment down below, and we'll take a vote on this. Should CJ show up every day to work here in his kimono?
Yeah, buddy.
Because he got a lot of kimono comments, man.
Yeah, but silver's getting crushed today, and I talked about it yesterday, so I don't know if I can bring it back.
It's like the kiss of death. Every asset you talk about in the road goes down.
Well, it's like trading advice from Ryan and I. If we buy anything, you sell it, because whatever we buy always goes down.
I saw somebody, they're like, the robe is a counter indicator.
That's too funny. All right, guys. Everybody, will see you tomorrow. Hang on to your handlebars. Watch those honey holes, and happy trading, guys.
Bye, everyone.